Welcome back everyone to the Audacious Money Witch channel where we talk about investing and trading and a lot of fun things. Tesla is going to solve what Apple failed to solve, which is autonomous AI technology. The world's real-world AI technology on Earth.
Not only for self-driving cars, but also the electrification. Plus, you have ride sharing on top of this, right? And so you've got kind of three vectors of change happening generally in the same time frame.
I think this is bigger than Gen AI for sure, because there are a lot of well-established firms are confirming my thoughts about Gen AI already, which is a trillion-dollar bubble or time bomb.
In the past few weeks, three prestigious firms have sounded the alarm, detailing a growing problem within the nascent AI space. Spending is too high and returns too low. To Sequoia, this is a mere $600 billion crisis. To Goldman Sachs, it's a $1 trillion problem. And one analyst at Barclays dubbed it the gazillion-dollar question.
It's irrational exuberance, as some Wall Street investors are saying. However, for the robo-taxi network, I think this application can actually change the world.
We're focusing on autonomous systems. And clearly one purpose of autonomous systems is self-driving cars. There are others. And we sort of see it as the mother of all AI projects. It's probably one of the most difficult AI projects actually to work on. And so autonomy is something that's incredibly exciting for us.
For your information, we are so close. In this video, I'm going to talk about Tesla's Q2 earnings, of course, and where do I think the Tesla stock will go in the next 6 months. And more importantly, why do I think Tesla will be bigger than Apple in 5 years? Last year, I tried FSD 12.3 in a Model Y test drive event, which is a move to a fully end-to-end AI model. So as Elon says, it's photons in, controls out. A couple of months ago, on top of that, is that Tesla is no longer compute constrained, which was a big limiting factor for progress of the model. And since that we've seen accelerated updates, for most recently version 12.4 has rolled out to select few users and has completely removed the steering wheel, and now Monitor is using the in-cabin camera. Elon mentioned that every point improvement, so going from 12.4 to 0.5 and so on, you could get up to 10x improvement in performance, and they are approaching removing all static object collisions. The bottleneck has now shifted from AI compute to more so model validation. This sounds like it's the last stage before the finish line. Now Tesla is now left to choose which model is the best. Now what's left is to determine which is the most performing model, and then put it aside with the large fleet or data advantage that Tesla has, and they are leveraging that in the model validation so far. This year has been a testament to Elon Musk's ability to lead Tesla shares into and out of trouble. It's been a volatile time even by Tesla standards, with the CEO battling for more control of the company. Turning back from $25,000 electric vehicle and ordering mass layoffs. These erratic episodes helped send the stock on a 43% plunge as of April 23rd, the day Tesla last reported earnings. The shares have been on a tear since then, despite an uninspiring set of results and the downward trend in expectations for the second quarter figures. The main rouser of a rally that added more than $386 billion to Tesla's market capitalization in just 11 weeks was none other than Musk. The CEO managed to get investors to pay more attention to Tesla's potential in a future dominated by AI, artificial intelligence, than its sluggish sales and earnings at present. His astute sense of what the market wants to hear and incessant salesmanship will be put to the test after the close, when the company is likely to post lower revenue for the second quarter in a row and a fourth straight drop in profit. But it actually posted higher revenue. Tesla's unpredictable shares have long been at the whims of the CEO's charisma and controversy, and investors appear to be bracing for more of the same heading into another set of earnings, with Musk likely to further address the company had postponed an unveiling of robotaxi prototypes that had been slated for August. Speaking of the result, Tesla's total revenue grew by 2% year over year to $25.5 billion, beating the estimated $24.3 billion, with auto business revenue declined 7% and energy business revenue increased by a surprising 100%, and service business revenue increased by 21% year over year. Well, because most of the earnings come from EV sales, of course, we know the earnings are down. Tesla's net income was $1.47 billion compared to $2.7 billion from a year ago, representing a 45% decline in earnings. Gross margin was 18% versus 17.4% estimated. EPS missed non-GAAP was 52 cents versus 62 cents estimated. This shows Tesla needs some new cars and cheaper cars to sell fast, because we can see from this chart they are losing some market shares because their aging lineup. The silver lining is the gross margin is higher than last quarter and they have more cash on hand, like $30.7 billion of cash. The sequential increase of $3.9 billion was a result of the positive free cash flow of $1.3 billion, driven by an inventory decrease of $1.8 billion and partially offset by AI infrastructure, CapEx, and $0.6 billion in Q2. Optimus is performing its first task handling batteries in one of our facilities. The south extension of Gigafactory Texas is nearing completion and will house our largest cluster of H100s yet. Tesla is currently between two major growth waves. The first one began with the global expansion of Model 3Y platform, and the next one will be initiated by advances in autonomy and introduction of new products, including those built on our next generation vehicle platform. Tesla's purpose-built robotaxi product will continue to pursue a revolutionary unbox manufacturing strategy. Musk touched off the rebound in Tesla stock by announcing alongside first quarter results that the company would accelerate the introduction of new models, including more affordable vehicles, too, as soon as late this year. Previously, the company had said it expected to start making next-generation EVs in the second half of 2025. The CEO was tight-lipped about details of those vehicles and also drew a line in the sand, telling investors they shouldn't bet on Tesla stock unless they believe the company is going to solve autonomous driving technology. Musk's aggressive effort to tether Tesla's fortune to autonomy has had its drawbacks. When Bloomberg reported this month that the company's robotaxi unveiling would be delayed to October, the stock fell 8.4%, its biggest one-day drop since January. The sell-off that we saw when Musk delayed the event tells us that a lot of the recent rally has been FSD AI related. Well, of course that was the case, because Tesla is not just an EV company, it's an AI robotic and sustainable clean energy company. Also, I think Apple is not a tech company, but a retail consumer product company. It can't solve autonomous AI tech, and it has abandoned the goal and the dream of its founder, Steve Jobs. While many analysts point to Tesla AI potential as the biggest support for the stock, Investors still want Musk to revive growth at the EV business while engineers work on self-driving technology. Tesla has significant attributes to be valued as an AI beneficiary, but the company must see a stabilization in the negative earnings revisions within the auto business first. Analysts and investors are also hungry for more information on Tesla's robotaxi reveal, which had been slated for August 8th but has been reportedly pushed to October. Musk confirmed the event postponement with a July 15th post on X, writing that there is an important design change to the front and extra time allows us to show off a few other things. With a robotaxi date in limbo, investors expect Tesla and Musk to give an update on the car's debut. Addressing the delay in robotaxi day and the new timing will be important to hear on the conference call, as we believe a linchpin to Tesla reaching $1 trillion plus valuation and ultimately higher over the next year is contingent on the AI FSD story materializing into a monetization path over the coming years. In my opinion, the next bull run for Tesla has barely even started. I think the stock will come down and retest this downtrend line. Then we will bounce it back up and go back to $300 a share. One area of surprise in Tesla's second quarter production and delivery report was a disclosure that it deployed 9.4 gigawatt hours of battery energy storage, its highest quarterly amount ever, and more than double the amount of battery storage the company deployed in the first quarter. I believe investors will begin to pay more attention to Tesla's energy, which valued at $36 per Tesla share, $130 billion, as the business uniquely positioned to benefit from investment in the U.S. electric grid accelerated by the AI boom. The real game changer for Tesla's valuation lies in Musk's ability to convincingly position the company as a leader in AI and autonomous technology. He will not be doing this alone. There will be massive talents and experts attracted to solve this for him. Simply because the massive scale Tesla has already been, it was in the Mag 7. That's where most people's invested dollars automatically goes to, so those companies will have an unfair advantage to mid or small caps. If the past 2 years taught us anything in the market, the rich only get richer. If Tesla achieves this, it will be absolutely miles ahead of competitors, and it is likely to be able to consolidate the biggest moat in AI field. Significantly bigger than Apple,